As the crypto correction continues to trudge onwards, it is once again time to be paying attention to some of the stronger assets in the past month that have shown relative strength and will very likely be the biggest winners if and when the crypto correction does end. With that said, welcome back to EllioTrades channel. I'm host Krown again today, and the topic of today is Near Protocol, symbol NEAR, talking about areas to be looking for on some nice lows and of course continuation long-term targets as well. As always, when it comes to these conversations, I'm not a financial advisor. This is not financial advice. I'm just relating the exact ways that I'd be looking at these assets as they come about. So with that in mind, I should also let you know if you are interested in a daily Bitcoin analysis, if you figure that might be useful for your life, well, I do exactly that on my own channel. There is a link in the description below as well. And let's get on to it right now, starting off with Bitcoin. And as always, we want to be aware of what Bitcoin's doing, not necessarily, or not to mean that you are interested in Bitcoin yourself, you may or may not be, but typically Bitcoin's direction does judge the general market, meaning that if and when Bitcoin does bounce out of this nice hefty downtrend that we've been in for about a couple months almost now, well, we would expect the general market to bounce as well. And with the general market bouncing, we'd expect the stronger assets during this correction to be a bigger beneficiary of that. So I want to bring you over here to my own application. You can find it again for yourself for free at app.krowntrading, Krown with K. .net, and it'll bring up this page here. And what we want to be focusing on is, again, the global open interest. We've been following this like an ongoing novel for the past couple months now. And we've essentially said that, hey, look, as long as this open interest is still not coming down to, let's say, 10 or 11 billion, it is still relevant to be looking for a continuation of this correction. And whilst, Bitcoin's certainly come down a lot since we've started identifying this data back on over in November, I would still say that this relationship holds true. So let's quickly and briefly go over it, and then we'll get into the bulk of the analysis today with Near. And that is, of course, anytime that we've seen the global open interest representing leveraged positions, both long and short, above 13 billion with a B for the past year, and there's actually even more iterations than what we're showing right here, we've seen, well, some pretty nasty downside corrections at minimum 20 to 30%, and on the top end, well, 50 to 60%, of course. The first one on the board here is from March 14th of the prior year, before Bitcoin went from $60,000 to $50,000 in a jiff. And then, of course, just a month later in April, we saw humongously aggressive reads, very violent reads all the way up to about 15 billion, which did precipitate the whole move down from $65,000 to $30,000 base right here, as which we did see a reset essentially again. Then once again, we saw the same thing happen in September from the washout from $53,000 down to $40,000, pretty much in just one day, and did spend about a month down there as well. And then, of course, the most recent one at the current all-time high at $69,000. Great number, as Bitcoin does come down all the way to $40,000 lows. And you can see in the past month, as we've identified, that once again, whilst Bitcoin did test around the $52,000 prior daily range highs, we did see the open interest get back above about 13.5 billion actually. So what I kind of want you to visualize here is a regression going from all of these lows, correlated with price action lows as well, by the way. I'm talking about this right here, this right here, this right here, and presumably the next one coming in somewhere around that region as well. And until we see those positions unravel, I would say that this asset is still, I wouldn't say in danger. That's the wrong terminology. Look, at the end of the day, we're traders, right? So do have to be open-minded towards both upside and downside moves, but cautious for any sort of major low being put in. So here's the thing. I do want to create a bit more of a bit of hopium here, as is relevant, of course. But please understand that until this really unravels, it is still likely more of the same. And that unraveling can come many different ways, but essentially leveraged positions coming off the boards, whether they be both long or short, will naturally bring that number down. However, at this point, you probably want to see the shorts just take profit, and then, yeah, it can probably play out a nice upside move. Okay, so let's go over here into our sentiment indicators, and I want to call out something that's very interesting, or at least what I thought was interesting on the fear and greed index, currently operating at a 23 read, which is extremely fearful. Yesterday was actually a 10 read, which is extremely, extremely fearful, in fact. So I want to call attention to this price action, or this sentiment reads right here, starting about a month ago in early December, versus what we saw over the summer, where we saw about 2 to 2.5 months in the extremely fearful zone. You can see that it's nearly a fractal relationship between the two, representing sentiment. And if we actually go on price action, you'll very likely notice, if I go over here to a daily, we even have a similar relationship on price action as well. And so the hopium right now is that Bitcoin completes a similar fractal to what you saw over here in this area over here. So the key ingredients of this, if this is going to work out, is that you get this first wick down to start off the whole shebang. And then you play back up towards your range highs right here. So that'd be right here and right here to kind of make a nice allegory between the two. That rejects, you reach for a bit of a slightly lower low right here, which is where we're currently at, boom. And what we'd be expecting from here, if this is gonna hold to fruition, is a bounce up somewhere around about $46,000, let's say, and then a grind down back around our current lows, like this, and then the bear trap right here, which would be like that. So that is the hopium right now, that Bitcoin does something like that, which would imply that Bitcoin would be waiting, or the crypto market in general would be waiting probably another month, maybe a month and a half, which actually plays into our analysis from the past months, saying that, hey, best case scenario for Bitcoin, this is like as much hopium as I can provide for right now, is that something like that happens. So again, please understand that there's a lot that needs to be confirmed in order for that to be even, relevant, but worth talking about as long as it has not been invalidated just yet. So let's get to the topic of today. Near, this is Near protocol, of course. Let me take everything off and let's just speak about this chart in general. It's up and to the right. We always like that, of course. And we like our higher lows. We like our higher highs, of course. So this chart was steadily going up throughout this whole corrective phase for the past month here. Yes, it is playing out a very small short-term downside move. However, this is still playing within a range overall, so I don't look at this as too concerning. So similar to the other, I guess, what are we calling them? The Foan tokens, Fantom, One, Atom, and Near. This one pulled back, just like we said was likely with the other ones. Not to say that to toot our own horn, but look, anytime that you test around your prior highs, you're probably going to pull back at least on the first stab, and then we just look for higher lows, of which all of the prior three, including this one, we're looking at them in kind of the same way. I think that we've hit pretty much all of the pullback targets for especially the most aggressive pullbacks, and I think on some of them more conservative pullbacks as well. In this case, Near protocol would be at its more aggressive pullback target, right down to this $13 blue box right here, which I actually had from my, because a lot of people were asking about this on my own live stream, so I actually had it marked off from prior. And this is going to have a chance to confirm what's called hidden bullish divergence on this next daily closure at 7 p.m. Eastern Standard Time tonight, that is, with any sort of a closure, especially above 1470. If that condition is met, that confirms hidden bullish divergence right there, and very likely begets another test around your $16 to $16.5 range highs. That is fine, but just like the other ones, I would like to pull up a more conservative target for a pullback, that being right here, right around 12. Let's just call it $12, 12 even. Any sort of a daily closure below, a little bit below $12, and I would say that this relationship or this setup is going to be invalidated, at least for the medium term. We very likely look for retracements down to low $9 and then come back to it after that with a fresh mind. There's nothing more to do. But for right now, I still like this setup, especially if this confirms right here. We have something that is rather interesting. So what would validate this as a breakout, thus also validating a continuation target? We need to see a daily closure above the high side of our current structure, which is 1658 or 1660 or just 16.5, close enough right there. Anyways, if that condition is met, we do have an implied target short term in the following week or a week and a half to about $19.5 to $20. But I don't think that things would actually stop there. The reason why I say that is because what we're going to do here is a volatility analysis within the context of this current consolidation. And so what I've done is I've marked off all of the similar volatility conditions that we've seen throughout the history of this asset with the green vertical bars. I just want to, show this in its totality right here that we're quite low on this. So naturally speaking, the indicator is, or volatility is, from this perspective, designed to expand. And volatility expanding implies price action gets more violent essentially. And well, more violent price action is what you expect. You're in your breakouts or your breakdowns, of course. Volatility is direction neutral, which is why we use trend and momentum to judge or get a bias on which direction it'll choose. But at the end of the day, the most pertinent and most poignant area to be watching is, again, the top side of this. A validation above there, we start to talk about some more impressive long-term targets, which we're going to get into right now. So what I want to measure out is all of the low volatility reads that were resolved with upside price action throughout the history of NEAR. Now, keep in mind that if Bitcoin does turn down, we're probably not going to see this thing break out, and we're probably going to correct deeper first before anything else. But with that in mind, let's pull out this one right here, this first one, producing about an 84% move from bottom to high before next correction. This one over here, about same thing, 120% move from bottom to high before the next correction. And then this baby right here for a 200% move actually over the course of almost a month before the next little correction and continuation, by the way. We have a very quick one right here coming out of this space from bottom to high, 80% move before, well, that one actually did fail, to be fair, but was an 80% move, which 80% moves are always 80% moves. We have this one over here, 100% move from bottom to high from that signal. And then this one right here, actually not same thing, 200% move right there. Rather impressive. So let's look at the potential targets to the upside, assuming that does play out. So we're making assumptions here that this is going to be the low. And let's just say that the implied move is going to be the top end of that target. That would be a 50% move based off of similar volatility readings, which would be an outlier, I would say. Now, we do have targets above there based off of our Fibonacci extensions, which obviously would imply a much more long-term view of this, meaning that first we'd have to hit this $20 target or so, validate above there on a daily closure, and then yes, we could start to incorporate targets like this up to $25, which would be about 100% move, which would be definitely consistent with what we have seen based off of those prior reads with volatility expansion from those levels that has resulted in an upside move, which again will only ever be validated with a daily closure above 1660 in this case. Now, I do want to point out that momentum oscillators are on the same side. I mean, weekly stochastic momentum is pointed nice and northwards as long as this thing's closing above $12.50, so not bad. 5-day also will remain with upside momentum as long as this thing is closing above 1118, which is actually closing tonight, just by the way. So things are setting up good for the long term. I would just be cognizant of what Bitcoin can do over here, because if Bitcoin does fail and we see one more washout move to the downside, we're very likely at minimum going to see $12 on NEAR. And if that area does give way, well, we're probably going to go into a deeper correction first before anything else. Anyways, I'm going to leave off the video right there. I want to once again remind you, actually, we have a little bit of a Bybit link in the description below, of course. Please do understand that this is really there for people who have a more detailed and experienced trading plan for themselves, so that you don't just get wrecked, because at the end of the day, why is Bybit offering like a major deposit bonus, which is very nice, very generous, obviously. I think it's like, I don't know, 3,000, 4,000, whatever the hell number of free money, but they're offering that because, well, they're likely going to make more money off of you than you off of them. So please do understand that it's or at least for my own self, I cannot in good faith suggest to use a leverage exchange if you have no prior experience. It's just not wise, really. So the best thing to do if you're in the learning phase and you want to learn more, I guess, is to not risk any of your finances. What you should instead do is to make what's called a testnet account or a paper account, which you can do just with a pen and paper, and try out your trades, whatever strategy you're mulling over, whatever strategy you're considering, and get your repetitions in that way. And if that works, then maybe consider. However, until then, I would suggest just being careful with it. Okay, cool. I am going to be signing off now. Take care, and I'll see you in the next one.